What we're seeing is an increasing pressure for ever more information.
In the arena of technology, one thing that we've noticed in the last couple of years is with the internet and email and everything coming on board, you really have to be connected and you can't be afraid of the keyboard.
There's a movement throughout the world of accounting standard setters to converge around similar answers. Ultimately, our objective is to have a single set of accounting standards used worldwide.
The future has changed pretty dramatically. You'll find, for instance, a great deal of growth in the business valuation field, where CPAs are working as investment bankers do, and they have a broader context.
We've seen the focus on accounting change over the years.
The role of an accountant has changed significantly to more of a business consulting role.
I would say one of the biggest things that I've seen come across in the accounting profession is the need to be a people person and the need to be able to develop those skills.
You have to be able to not only speak the language of accounting, but you have to be able to share it with somebody in a way that from their perspective they can see how it impacts what they do.
Today's business environment is more challenging than ever. Faster, more dynamic, promising huge rewards and an equal measure of risk. Information is vital, sometimes priceless. With so much at stake, the accountant has emerged as a key player, part of a team that guides an enterprise through the shifting currents of a global marketplace. In the most basic sense, accounting is an information system for decision makers, whether they're running a Fortune 500 company or investing for retirement. Often called the language of business, fluency in accounting is a prerequisite for success in the business world.
Show me the money! Show me the money!
Congratulations, you're still my agent.
Show me the money. In essence, it's the unspoken request of anyone who's investigating the financial health of a company. Where is the money going? How much is coming in? How much is going out? Where is it being invested? Is the company making a profit? How is it growing? All of this information is vital to anyone whose financial success is tied to the performance of a company. And no one's more interested in the financial health of a business than the owners. It's their own money that's at stake.
From the very beginning, I understood that in order to be a part of the American free enterprise system, that it was going to require some disciplines. I call them lemonade stand disciplines that we really should learn early on in life. And that is being able to record the revenue of any enterprise that you're being involved in, whether it's a non-profit or for-profit enterprise, being able to accurately record those revenues, being able to determine what your cost of goods sold are or cost of services provided are, being able to determine that so you'll have an accurate idea of what your gross margin is in a product or a service. Then going on to be able to say, what are my general and administrative expenses that keep this enterprise or endeavor going? And then being able to determine what the taxes are, what my tax responsibilities are, and what is it that I'll keep for myself going forward.
Creditors also have a keen interest in a company's financial health. Primary creditors are banks, loan companies, and other lending institutions that provide financial resources to a company. Creditors also include anyone who supplies a firm with goods or services by extending credit. When evaluating loan applications, creditors often analyze a range of financial data.
We get statements prepared from a variety of sources, but typically we're going to take those statements and put them into a spread format, trying to line up historical statements on a year-by-year basis. And if they're not categorized into current assets, current liabilities, long-term assets, long-term liabilities, we'll make an effort to do that, because what we're trying to focus on as lenders is truly what is the short-term obligations of that business that are coming due within that 12-month cycle, because that's going to figure pretty heavily into our assessment of what their repayment capacity is on our loans.
because they probably make the loan more on the basis of the life insurance.
Managers rely heavily on accounting information to make critical decisions. In order to make a company profitable and achieve revenue goals, managers must constantly evaluate performance and make adjustments as necessary to keep a company on track. Andrea Rideout, president of Nostalgic Warehouse, which markets a line of decorative brass hardware, meets weekly with her accountant, Jerry Galloway, to keep tabs on her business.
Jerry and I meet at the end of every week and discuss what our sales have been for the week. And we might look at which of our customers is ordering more, who's falling off. We might look at who owes us money and might suggest ways of bringing in some of those collections. We might project out what our plans are for the next week or the next month as far as expenditures. Do we have the cash flow coming in to go ahead and hire that extra staffer for the warehouse? Or we need to improve the die on one of our products. Do we have a little bit of cash coming in to be able to do that? And so we really look at it very closely and keep a pretty tight ship as far as what money is coming in and what money is going out.
I wanted us to be able to verify our gross margins.
Government agencies, like the Internal Revenue Service, use accounting information to keep tabs on businesses that owe taxes or fees. Regulatory agencies also track financial reports. These agencies range from the Securities and Exchange Commission to the U.S. Department of Labor. State boards and commissions also monitor business income.
What we try to do is make sure that the marketplace participants have the information that they need to make informed decisions about whether to invest, how much to invest, or whether not to invest, to make investment decisions.
It is exactly 1 day now from the threatened pilot strike that could shut down the nation's largest airline.
Employees and trade unions use accounting information to assess the fairness of wages, as well as gauge future job prospects and job security. And securities analysts, as well as individual investors, use accounting information to judge the investment value of a company and when to buy or sell stock.
I think financial information is important in analyzing a stock and making a decision to buy a stock because you can look at, and it's important to look at predictability. What's the revenue growth? How long has it been that way? Earnings. What sort of trend of earnings?
Financial statements do have a good use and limitations also. They give you a snapshot of the company and allow you, because they are standardized, to compare and contrast companies in the same industry. The limitations of balance sheets and cash flow statements and things in an annual report are that they are a snapshot in time. They are not a moving item. They do give you past history. However, they don't tell where the company is going from that point on.
From owners to analysts, accountants attempt to satisfy the sometimes contradictory needs of a diverse group of individuals. This is challenging in part because information costs money to gather. As the economy becomes more globally integrated, the lack of information, and in some cases, the lack of proper accounting standards, makes a challenging problem almost impossible to resolve.
There's a wide diversity in the use of accounting information today, mainly because we have a broader base of shareholders. We have people in the United States who 10 years ago were uninterested in corporate financial reporting, but through their pension plans and IRA plans, they have become, if not shareholders in a company, at least shareholders in mutual funds. And that often leads to an investment in a company here or a company there. These individuals are interested in what is going on in the company, and so the burden is on companies to report the financial effects of the transactions they've entered into and the events that have happened in a year in a way that users can grasp what is going on.
To ensure standardized reporting, U.S. corporations are required to use Generally Accepted Accounting Principles, or GAAP. GAAP rules are set by the Financial Accounting Standards Board, or FASB. The board's decisions are guided by input from a broad spectrum of interested parties, ranging from investors to government agencies, such as the Securities and Exchange Commission.
The bias in the United States is for more disclosure rather than less, whereas in many other parts of the world, the financial information is used mainly by the managers and a few bankers who own the stock in the company. And there, the demand for information is far less. So what we're seeing in the United States is an increasing pressure for ever more information. Even if the individuals who are the stockholders don't have a direct interest themselves, the people they turn to for advice in the investment community, financial analysts and others, they like to have as much information as possible so they can make their assessments and predictions about the future.
Whatever the limitations, accounting remains an indispensable tool for making sound business decisions.
And you know, another job I can't understand is accountants, because everyone's always picking on accountants. Like, you're an accountant, ma'am? Yeah, everyone's picking on accountants. They're so nerdy, they're so straight-laced. Well, they're an accountant. I mean, what do you want doing your money? A biker?
Over the years, people have poked fun at the stereotypical image of accountants.
I'm having a big party for all my clients. My 4th anniversary as an accountant, you know.
They're portrayed as drudges.
Oh, I'm an accountant.
Bean counters. Boring number crunchers. But is that really an accurate image? And what exactly is the role of the accountant today?
That the role as an accountant is continually evolving at this point and will continue to do so in the future. When you think back to history, I think of a professional accountant as someone with kind of a green lampshade, and they sit there and they maybe do their work or they do an audit. And they're very focused and they're very detail-oriented, but they're not really able to get outside of the box. And I think that's one of the things that's really changing in the accounting profession.
I would say that the role of an accountant has changed significantly just in the about 13 years, I guess, that I've been an accountant. It's really moved away from more of the debits and credits and transaction level detail to more of, I would say, a business consulting role.
One of the things that he asked about is in the 401k.
We've seen a great change in that, where it's just critical that a professional accountant is actively involved in the setup of this software. Someone who not only understands the technology, but more importantly understands business and also understands accounting. So that in my firm, which is a firm that specializes just in installing accounting and financial information systems, of our consultants, the vast majority of them are professional accountants, and in fact the vast majority of them are certified professional accountants.
I'm glad that you had some time that we could talk about these.
This move to a consulting role is particularly noticeable at the nation's largest accounting firms, like Deloitte & Touche.
I would say that one of the things that we're seeing in the accounting profession is that the term professional service organizations is used much more frequently now by all of the firms, at least national firms, and probably will start to be by regional firms as well.
Under the umbrella of management consulting, Deloitte & Touche has augmented its tax-related services and expanded into new areas, such as fraud and forensic accounting.
We have an actuarial group, a group of actuaries that provide services to our clients as well. So I think that just the level of service that we provide and the different things that we are able to do for our clients is probably the biggest change in professional accounting.
Even the names of the various departments are changing to signify a more expanded role.
You know, we look at our different departments, and the way we term our departments is different. We used to call ourselves the accounting and auditing department, and now we call ourselves assurance and advisory. So we're still A&A, but we're assurance and advisory now. And that's one of the key things that we start to focus on is trying to walk outside of the audit and say we need to add value to our clients.
Summations look good.
As the consulting role of the accountant has expanded, accountants have become part of the management team, called upon to present and interpret financial information. This evolution has compelled accountants to expand their knowledge base.
I would say the biggest challenges I see is the need to keep up with what's going on in the industry. And I look at that at two levels. One is I have the responsibility of making sure that I'm on top of what's happening in my industry, which is the software industry, as well as keeping up with what's happening with accounting rules and regulations to make sure that we're on top of those and that we're responding to those things properly.
The $9,500, did you want that paid on Tuesday?
That's the sum of those two amounts that are moved out and see if you anticipate any problems.
As all these salary updates.
Because they interact more with management and clients, accountants today must also have strong communication and negotiating skills.
I would say one of the biggest things that I've seen come across in the accounting profession is the need to be a people person and the need to be able to develop those skills, because you do work with all different kinds of people, all different levels of management, and you really have to know how to deal with those people and adjust to their different management styles. So I think it's very important that you're a people-oriented person and that you're able to get along with others and work in a team type situation. And that's one of the keys, and definitely that's something that continues to evolve and change in the accounting profession. Remember that we actually disclosed all the different components.
I think you have to be able to not only speak the language of accounting, but you have to be able to share it with somebody in a way that, from their perspective, they can see how it impacts what they do. I mean, that's real critical.
It appears that the old, dull stereotype of the accountant just doesn't wash today. As a team member in a dynamic business environment, the accountant has a demanding, high-profile role that is often a path to the executive ranks in corporate America. Centuries ago, navigators developed a simple but elegant tool for plotting their location on the globe. Today, accountants have an equally simple and elegant tool for getting a fix on a company's financial status. It's called the accounting equation. The equation states that assets equals liabilities plus owner's equity. The numbers you plug into the equation are drawn from transactions. A transaction is an event that affects the financial position of a business and can be reliably measured. For instance, elections and recessions can impact a company's profit, but you can't measure them. On the other hand, buying supplies, selling goods, and reinvesting profits are all measurable functions. To get a better understanding of how this works, we'll take a closer look inside Nostalgic Warehouse, a sole proprietorship. Andrea Rideout started her own business shortly out of high school. The company began as an antique shop, then gradually transformed into a wholesaler of decorative door and cabinet hardware and related items. Andrea did all the accounting herself at first, then realized she needed help to make the business grow. She hired an outside accountant.
At some point, it even became almost a mentoring situation where the accountant would come in and spend long hours helping us to decide the path for the business, which direction we were going to take it, wholesale or retail, helping us to evaluate our profits based on those different paths. And really, at that point in time, the accountant became almost a business partner, even though he was an outside subcontractor.
We're tracking our number of dealers, which is
As the business grew, Andrea found it was more cost-effective to hire a full-time accountant. His key contribution has been to help Andrea develop a strategy to realize her long-range goals.
That really kind of drives everything that we do. We're basically a new startup business, and we have some goals where we want to be, sales projections, where we think we ought to be at the end of this year and at the end of next year and the following year. And we have a path of number of dealers and how much per dealer volume that we have. And so that's really kind of drives everything that we do. We're shooting for those targets. And then we have certain margins in our product that it takes for us to be profitable. I think she's printed lists and given those to the... What is the problem on this one?
In order to help Andrea translate her goals into reality, Jerry had to rely as much on his communication skills as his accounting skills.
being an accountant, I probably have a little bit more of a conservative outlook on the way the business runs, and Andrea, as the owner and the kind of the originator of the whole concept, is more on the creative side and more of the sales side. And so I have to be able to understand what she wants to do and then translate that into reality and what the dollars are. And I think that may be a hard task, because the two of us have to be able to use our separate skills and yet put those together.
Like many startups, the business was financed internally. But after 10 years of self-funding, Andrea was eager to grow more rapidly.
So we went to a bank and presented them with our profit and loss statements for the several previous years, and of course our income tax reports and all the various reports that showed them that we were growing and making a profit. And actually at that point in time we had a pretty easy time getting the funding that we needed, which was probably in the $50,000 range.
The financing was entered into the ledger as a transaction. Here's how it looks in the accounting equation. The loan increases the company's assets and increases the company's liabilities by the same amount. Among other things, Andrea used her loan to buy inventory to expand her product line. The purchase of inventory is entered as a transaction. In order to ensure that her product line is generating a healthy profit, Andrea relies on various financial accounting data to track revenues and expenses and determine when price increases are possible or necessary, and how much they can be increased.
It's amazing to me how much 1% or 2% can bring in additional revenues. You know, if a company's doing, say, $1 million a year, and you raise your pricing 1%, well, that's $10,000 a year that you basically get for doing nothing.
Regardless of the size of the business today, managers have come to rely on accountants for more than financial data. Accountants today are viewed as consultants, even partners, who help chart a company's success. To provide a quick picture of a company's financial status, accounting transactions are distilled into summary reports. There are 4 basic reports: income, equity, balance sheet, and statement of cash flows.
Give me a report on the accounts receivable today. What I need to know in particular is...
Using these tools, Albert Black, President and CEO of On Target, was able to make important decisions about the growth of his business.
From the very beginning, I was the most interested in the income statement. What was my revenues and what was my net income? Were we selling enough and were we profitable? So I really focused on the income statement and considered myself an income statement manager. Then as we began to intervene with the capital markets, either from the debt side of the market, working with bankers or similar type lenders, they were always focused on the balance sheet. They wanted to know what we had in the form of assets, what we owed in the form of liabilities, and what was the resulting equity. So they were really sensitive to the balance sheet. Since I've grown and developed over the years, I've become more accustomed to managing the cash flow statement. Accounting reports that we have this morning.
Well, I hope I can help you with them.
All right, taking a look at the balance sheet first.
Whatever size the enterprise, the same basic financial statements provide valuable decision-making information.
I can think easily of examples where reviews of financial statements have resulted in a policy shift. We are a business that it operates in different market segments. We have a consumer market segment, a wholesale market segment, and a segment that serves business customers. And as we look at our general financial statements for those segments, we'll notice levels of performance that may be indications of bad decisions in terms of servicing specific customers within the segment. It may call for price increases within the segment, or basically scaling back in terms of servicing this segment, making sure that we're not going to market with an offering that is not as profitable as we'd like. So those general financial statements can be very helpful for also assessing investment between the segments and looking at the net realized revenues or operating profits of the various segments.
By offering managers a snapshot of a company's performance ranging from income to cash flow, Summary reports have become an indispensable tool of business management. In a world that's constantly in flux, accounting remains a source of steady, reliable information. No major decision related to investing or lending money can be made without it. It's the lingua franca of business, because the accounting process remains fundamentally the same regardless of an entity's size or industry. The accountant records measurable events or transactions and applies this raw data to the accounting equation, establishing a company's financial status. Transactions are distilled into summary reports, which become the guideposts for decision-making. But the accountant's role today extends beyond recording transactions and presenting reports. More than ever, accountants are called upon to analyze and interpret information, to exercise imagination, and think dynamically and strategically. Leaving the old stereotype behind, today's new finance professionals are expanding and redefining the role of the accountant in business.